Good afternoon. Welcome everyone to the Infinity Workforce Solutions Fast Forward webinar series. My name is Steve Kessler, and I'll be the host of the program today. First of all, I appreciate you all taking some time out of your day to join us on the program. We got a really good topic today. It's something that is always of concern to people in this industry, and that's about insurance. Our program today is entitled Winning the Insurance Game. I love that title, by the way. How high-performing trucking companies are fighting back against rising insurance costs. So I think this will be a very helpful program as y'all are getting ready to renew insurance or trying to prepare to do the best job, put your best foot forward. I think you'll get some really, really good information here today. I also want to introduce Mark Ray. Those of you that have been on our programs, our webinars over the years, pretty much all know Mark. Mark's an industry veteran. He's been at the executive level in trucking for better than 35 years. So it's good to have Mark on the program. Mark, have you got any words of wisdom before we get started here?
Absolutely. I'm looking forward to Patrick telling us how to win the insurance game. There's winners and losers in the insurance game, and I think he can bring us some very good insight on this whole concept of risk. I think we'll all agree that every time a tire rolls down the road, we are taking a calculated risk. And I'm really looking forward to Patrick's comments on how to assess that risk from an insurance point of view and what a carrier can do to manage that risk. So really looking forward to today. It's a big part of our business these days. The verdicts are out there, and you don't want to be you don't want to be on the receiving end of one of or the giving end of one of those verdicts.
Absolutely. A couple of housekeeping things real quick, and then I'll introduce our guest. Everybody that's joined the webinar is muted, so we can't hear you. But you do have the option to use the chat box, which you'll find there in the tray in the bottom. So if you'd like to pose a question, you can use that. There's also a Q&A box where you can type in a question. Matter of fact, if y'all don't mind, you might want to just jump on the chat, tell us who you are, who you're with, and where you're from, so we can kind of know who's out there. So while you're doing that, let me introduce our guest today. Our guest is Mr. Patrick Thomas. Patrick is currently a managing partner with Southwest at Acrisure. Actually, Patrick, before Acrisure, served as president of RSI Insurance Brokers, which was a company that was acquired by Acrisure. On top of his extensive knowledge of the industry, he's well known for his leadership and energy that cultivate a group of people who are driven to grow and succeed. He's a graduate of the University of San Francisco, as well as City University of London. Patrick currently lives in Orange County, California. So Patrick, welcome, and we're anxious to hear what you got to say.
Yeah, well, thank you very much for having me. I feel like I've hit that age where I get to reference my alma mater and think, oh my gosh, this is now more than 20 years ago. Like, this is wild. It's crazy. But for quick reference, I mean, trucking has been near and dear to my heart, my family's heart. I've been in it since birth. I got into the business because it was a family business. We specialized in providing insurance solutions to the trucking community. So without you all, I wouldn't be here. So first, let me just say thank you, right? Like, I cannot thank the trucking community enough for everything you do. Without your efforts, we would have no economy of any kind, right? It's like, I very sincerely mean that. You are the backbone to what we do. Absolutely necessary, sometimes underappreciated or worse, forgotten. We have to bring you forward, and it's my honor to be here today to help give tools, guidance, resource. You can hate me for being Californian. That's okay. I get it. We have a goofy, weird state. We do some bizarre things, but I'm on your side. You know, I want to empower you, whether you're clients or not. Go control the things you can to understand how did we get here And more importantly, what are we going to do about it? So our philosophy at Acrisure is to really just guide and educate our clients on what the insurance process is. And if we were in person today, I would ask everybody to raise their hands if they have had a fantastic insurance renewal. I would say most people in the room aren't even trying to move a muscle. They're like, did you just say a fantastic insurance renewal? And I'd say, yes. And they'd say, nah, not me. And I'd say, okay, well, what about a good insurance renewal? Probably about the same number of hands move. Say, well, who's been disappointed with their insurance renewal? And almost always, like, we get the majority of people in the audience to go up. Well, here's why. I get the benefit of selling a product nobody likes buying, that they hate using, and even when they do, it's still a difficult outcome, right? Like, inherently, insurance has been this bad thing. And that's because insurance companies are paranoid and don't have trust. And because of that, consumers, us, we don't trust insurance companies. We feel like it's this poker game. I'm here to disarm everybody. The reality is we have so much information on everything that exists within enterprises, specifically trucking companies. There's no more secrets. We don't need to play poker. And I think when we disarm ourselves about what our approach will be to winning the insurance game of this is about clear, consistent communication, this is about honesty, this is about transparency. When we start there, when we just show our full deck of cards, insurance companies don't know how to respond other than thank you. Now it feels like a partnership. So let's start our journey. We have a couple of slides to get through. We have our bios. Thank you very much for Steve and Mark for sharing those on us. Now it's time to win our insurance game. So everybody in the group, again, is thinking, no matter what I do, my insurance costs are going up, right? And there's some honesty to that. And what we need to start to understand is, what's the state of trucking insurance, right? We can control a lot of things, but there are certain things we can't. Step one is the market. We can't necessarily control the market, right? What the Fed rate does, what politics do, performance, nuclear verdicts having impact on truck insurance markets. These are things that systematically within trucking we have to respond to. And the unfortunate thing is we're not in a good state. Nobody should be in the expectation that commercial auto insurance, or more specifically trucking insurance, has been wildly profitable for the entire nation. It's not, right? So if anybody tells you, I'll save you 50%, one of two things are going to happen. Either they are a professional liar, and that's not good, or you're going to get what you pay for, and that's probably going to be worse than if you would have settled with the first thing, right? We're in a market cycle where it is difficult, believe it or not, for insurance companies to make the profit that they have to maintain their shareholder interest if they're publicly traded, or for their equity partners within the business. And we know that for a lot of reasons. There are a lot of people engaged in a truck insurance claim. TPAs, underwriters, attorneys, investigators, and those costs of those claims, no matter what they are, we all know, see, and feel that a claim is dramatically more expensive today than it was yesterday. Because of that, our insurance costs are rising, right? We are following inflation plus, all these other things leading to impact. So I think having just a fair understanding of the insurance market, of what's impacting it, lets us understand how we got here, right? Fatality accidents. There are more of them occurring throughout the country today than there had been historically. Nuclear verdicts. It's a term I think the trucking industry kind of like helped not invent, but we're the leading front of that. We're on this unfortunate journey where plaintiff attorneys have learned how to exploit insurance companies through manipulating data and the peer group that is now a jury to a trial. We're stuck with that. And these things, these massive $100 million claims, and we've all seen them like Wabash recently, or other manufacturers of equipment, even tractors now getting brought into it, that it's not just the trucker, it's not just a shipper or a freight broker, it's everybody. And these mega claims have huge impact on the insurance financial world to where they have to overcorrect. And that overcorrection means more rate on us, which is not fair, right? But that's part of the market environment we cannot control. But there are things afterwards with who we partner with and align, and we'll get to that where it makes sense. Cargo theft is tough, right? In California, you can just steal about anything and there's no consequence. It stinks, but it's the reality of the circumstance that the cargo theft is going up 4 times what it had been. Fraud is rampant, right? Freight broker fraud is rampant, and those claims are getting paid, and we have to play catch up in there if we don't have the controls and measures in place, right? We know the litigious environment in every state. You know, Mark and Steve and I were talking about, man, it used to just be California, Florida, Texas, New Jersey, New York, Illinois, but the reality is it's kind of everywhere. It's Louisiana, it's Arkansas, it's Alabama, Tennessee now. Like, there is really not a safe place to go have an accident and feel like confident that we're going to win. Again, that's another driving factor to the cost. So again, I think level setting where the insurance market is and understanding that is a fair expectation on our part of where do we want to go and how do we want to get there. And I like starting with that with our clients to talk about, you know, as we go through the insurance journey, right, our renewal process, what we need as insurance agents is fair feedback from you as the trucking client. Tell me, where do you want to go? How are we going to get there? Because if I know your goals and you know mine, which is to perform for you, we have alignment. And the more clear that alignment is, the better your expectation is met, so that next year, when we have this meeting again and I ask, hey, how did everybody's insurance renewal? Was it great? We get a couple more of these. And that would be a good thing, right? So going into truck crashes with injuries, we can see that the miles driven and the cost per claim is going up over 50%. That's not good for us. Again, another impact validating why increases in insurance rates are there. Increases on fatalities. Again, we're almost 30% more likely to have a fatality accident. Trucks are big. Every truck could potentially be 80,000 pounds, and they have $1 million check in the glove box. We want to arm you to make sure that that check is preserved, right? But we do know there is an increase there. Again, those increase in fatalities sets the expectation that insurance companies need to play catch up. They have to be solvent to continue to pay these claims. Again, kind of the roadmap of where the accidents are occurring in the more litigious states. I'm probably going to have to update this map. I think every state will probably be filled in before the end of the year. However, these states here are the ones that have larger claims than normal, right? We know the claims occurring in California, throughout Michigan, Illinois, even some of the East Coast states, Virginia, Ohio, Pennsylvania. Claims occurring in these states are larger. Where you drive matters. But I do get the practicality of it, right? If you're delivering freight that consumers buy, you have to go where consumers live. That's these populous states. There's no other way around it. But we just, again, have to be armed with the understanding that if I'm driving more miles into South Dakota, there is likely a lower insurance cost than if I drive 100% of them in California or Florida. That these are factors we can control, right? Again, talking about the skyrocketing costs of insurance, here's some stats, again, trailing over the past 10 years of where costs are going. Again, probably don't need to spend too much time in here. It's just another anecdote of validated data. We're spending twice as much to cover insurance costs. It's not fair. And we're stuck with increase after increase after increase. But it's, again, it sets and validates the expectation of where is the insurance market. Like, do we think I will have a reduction by 50%? No. Again, here's part of the why. So for fleets, you know, where we're talking about size, deductibles, what should we have, what shouldn't we have? These are good guidelines, right? Like how we've bought insurance historically today, you know, today versus where we were 10 years ago, 20 years ago. We should think about advancing. And that ties into the story of where do you want to go? How do you want to get there? And I would say take time with your teams, bring in your CFO, your safety director, your chief operations officer. Let's talk about the challenges in the business and what the impacts of changing deductibles or lowering limits have. That, again, having been in trucking my entire life, I get it. We're in a cycle where there's a little less freight than there had been, and in some cases, a lot less freight available. The freight that we are moving, we're probably moving for smaller dollars, meaning our margins compressed. So cash flow is a real issue right now. And deductibles and limits are things that are possible considerations for how we affect that, right? We know when that's the case, we're going to take on larger deductibles to help lessen insurance costs. But there's a cash consequence. If a claim happens or claims frequencies start to pick up, we might be caught off guard. If we reduce limits, that can be a difficult position for us to defend in the event of a catastrophic claim. If our peer group has limits of 10 million, 25 million, 50 million, maybe potentially $100 million limits, and we have less, we might be targeted, right? Again, these are factors that we just have to be open and honest about talking about of, as we maneuver the dials that we can change and get through in our process of what the impact is to us as a business, right? So where are risks hiding today? They're everywhere. Risks in a business are no longer just wheels on the road. They are everywhere, right? And again, I think a very important process for us to go through as we're talking about where do we want to get to and how are we going to get there is let's be open and honest, right? We need a genuine assessment of our safety, our operations, and our compliance, right? And safety isn't just a culture. It is an absolute must, right? We have to hold ourselves to the highest standard we possibly can. If we do anything to compromise safety, it'll be discovered, it'll be used against us, and it makes every other future insurance renewal that much harder to play catch up because we're in a defense position. We need to play offense. When it comes to operations, we need to have KPIs that we generally manage. I'm a believer that if we can't measure it, it's hard to prove if we're doing it well or not. And we could spend a whole other hour session going into KPIs and metrics of what we should manage, whether it's cost per foot, cost per mile, and all these other parameters that impact your business. But again, measuring safety, our operations, and compliance, which to me is different than safety, right? Safety is the things that are not forced upon us per se, right? Compliance is what the DOT is going to mandate. They absolutely tie together, but safety has to be at our core in order to get all these things done well.
So Patrick, I had a quick question on that.
Yeah.
When you mentioned safety culture and measuring everything, how would, from an insurance point of view, how do you measure safety culture?
Well, I'm glad you asked. In our workshop, which this presentation is a part of, and I'm happy to share this with anybody that would like it, we go through an analysis, right? On this page, we have general questions that are asking for you and your teams to complete them. So we actually collect data. We build a narrative around it to give you insight, right? So like we're asking your safety team, do we have safety message or do safety messages have an emotional or personal connection, right? Do we have driver training? But all these things that, are we doing it some of the times, never, always? And depending on the feedback we get, we begin to start building a documentation file of, can we prove it, right? And that's what we have to do in the openness of our insurance renewals. Everything we say we do, we have to prove we do. It's no longer just, let me take you for your word, right? Because let's assume every underwriter thinks we're guilty until proven innocent, and they're naturally skeptical. Our job is to help guide and predict what the questions are going to be, the hard ones, right? How do you train? Well, I do, meetings once a month around the water cooler. Sounds great. Well, how do you prove that those meetings happened? Unless you have a system to document it, which our partners at Infinity have a brilliant one, it's very difficult to prove, right? That's a metric of how many people were in attendance. What was the content covered? Do we have tests that we take after the fact, right? So for safety, again, we'll start with a higher level observation to get what is the pulse of the people, right? So management through executives, what's the pulse of the people, how are we doing it, and provide that feedback to our clients to help them with that journey. Sometimes we uncover things that people just don't like talking about, right? Because it can be uncomfortable. So I think it's a great question. Hopefully I answered that for you, Mark.
I got a follow-up question.
Yes.
If you're looking at safety culture and you're looking at compliance, do you weight one of those larger or less than the other? Or are they the same? What's the balance there?
Yeah. I would say they're close. And it's fair for debate, right? But my personal belief, the culture of safety plays a higher importance than compliance. If we're performing at safety, if we're truly leading best in class there, our compliance would naturally follow suit.
Yeah.
So compliance is what the government's going to regulate us to a minimum standard. Safety is everything above that.
Okay.
So
Yeah.
just being compliant today is not good enough, is it?
It's not. It's not, right? Like if we truly want to control our costs, if we're adhering to the minimum standard, right? If the DOT or our local authorities say, here's our benchmark for good or bad, if they're saying, here's our minimum standard, great, we meet that. We're able to operate. That's what they would grant us.
Yeah.
But from a cost standpoint of how do we control our insurance costs, if we're meeting the minimum standard, and again, I think that's important to emphasize, and I don't agree with all their standards, right? So I'm not saying the DOT is right in any way, shape, or form. I think they're wrong in many of them. But however, if we're adhering to the minimum standard, great, we qualify. But that doesn't mean we get an exceptional outcome. That just means we'll have probably that below average expectation of limited terms and conditions and a very expensive price. So in the discovery process, again, I think it's important to ask these questions like, can we validate? Do we have a safety culture? Are there safety goals that the business has? Right? And we can go through additional questions, again, talking about data and metrics and understanding what we're trying to emphasize as a business, right? And we can uncover areas that genuinely need improvement or that you're doing exceptionally well. In the insurance renewal process, it is vital to hit on both, right? If all we're doing is advertising the good and not addressing the reality, we're not building the partnership with the insurance companies we necessarily want. If all we're doing is addressing the things that need to be fixed, we're missing a key objective too, which is sharing the positive work that's allowed you to perform, to excel, to let you be better and prove you're better than your peers. So it's a balance, right? And when I talk about it's no longer a poker game, this goes to our methodology of we got to put all the cards on the table, share what we're doing for improvements, let our partners know that we take them seriously, what are specific calls of action that we're going to change, as well as advertise what makes your company exceptional. Then we have a basis of trust so that when we go through the what's next of negotiating, looking at different solutions, there's a lot of buy-on. And I think that's really important, right? I think it's important with who everybody picks as their partner, right? If all we're doing is asking for basic information, which competitors sometimes do, then you're going to have a basic outcome. But if we're going deeper, going further, going farther, trying to make a robust database of intelligence on your operation, you should have the confidence that you and your partners, hopefully us collectively in the room, but if not, still have a better outcome. And as long as we achieve that, I'm happy to participate and guide, right? Because it's truly a journey. And if we all do well, then we all do well. We pick up additional data points too about understanding how well do we understand compliance in our business? So like you asked, Mark, it's an important and material fact to how insurance companies make decisions, but what's our score? Are we passing? Do we have an alert status? What are we doing about it? And these are all indicators that everybody has access to that we should be monitoring and looking for performance every day, every 30 months or every 30 days, right? Like we have to see improvement. Unless we're all at 100% green pass, again, even there's something that we could probably do. And all these things impact your operational expenses, obviously insurance costs. But if we're not documenting it, and we're not being open and honest about where our performance is at today, no different than lost runs and claims, it's one more thing working against us that we're trying to hide. And if we're that turtle, you will not be winning your insurance game. We're hiding. We're playing defense. We no longer have to do that. So what's our de-risk strategy, right? We want to talk about safety and operations and compliance. Write down and commit to what our goals are. It's an important process because if all we do is say it, it's going to be hard to enforce.
Right.
But if we document it, no different than training, right? If we document training, we know it happens. If we document our strategic initiatives related to safety, operations, and compliance, we have something we can pinpoint. These three areas always have the ability to change, right? Nothing's set in stone permanently, because if we accomplish them well, there should be something next that can fill its place. So in part 3 of our journey is kind of the risk financing aspect of it, right? And I'll start with, before we worry about the risk financing, I would say you should worry about the partners that you're engaged with, right? That if you share your story, you own and know your data, and have the insight to all aspects of your business, who's the right person for you to trust in that process? If the person's just asking, I'm going to make your life easy, give me your loss runs, vehicle list, and maybe something else, I'll have you quote, you might not win the insurance game. But if the partner you pick, if your key initiatives, business philosophy aligns with theirs, you'll have a very open relationship to where you can entrust them with data that you may not with somebody else, that in fact will likely be beneficial to your renewal. So once you select the right partner, committing to that, you can talk about building a new insurance program, right? So it goes back to your first question of, where do I want to go? How do I want to get there? So let's build an insurance product that is truly for high performers, right? Again, in our workbook, we're going to talk about the things that impact high performers. I think we all agree that a safety culture, if you have a strong one, is a plus. That's a positive impact. If we evaluate, through our risk assessment that was in the prior slides, if it's negative, that goes against us. Same with compliance. Same with the financial statements of your business, right? The health of your balance sheet will actually have positive impact in your insurance renewals. It might require lower deductibles, lower retentions, or give us affordability to have higher ones, but with less collateral, right? Like all these things tie in together. Same with our CSA scores, that if we have bad CSA scores and our financial position is a difficult one, right? In that case, we might not have the ability to get a deductible that we want to help neutralize insurance costs or to have participation in control. So all these things absolutely factor into the journey that we're going through. So with that, again, sorry, I went in the wrong direction. We have a couple other items, again, through our metrics of talking about driver turnover, where we go, the jurisdiction, right? Like we know if a claim occurs in Idaho versus California, those settlement costs will be different, and we should anticipate that. Technology and data sharing, that is a massive one right now. Having insights to telematics and dash cameras and automated ways to report claims, all these things absolutely matter. And they're accessible, they're at our fingertips. You can have a very robust system that it can be expensive. There are other low-cost providers. Something I can guarantee you is better than nothing. Doing nothing about it will put you in a vulnerable spot. The quality of our drivers, obviously that impacts how trucks are being utilized, driven, and maintenance, everything else that we do. Like we know the impact drivers have, that's obvious. But again, taking the time to understand the commitment your executives, your leaders, even investors, and your managers have to supporting the efforts of the business. And again, us helping prove where they are committed or where we need to reassess or realign, that helps. That helps with our insurance story.
Patrick, when you say that the commitment of executive leadership would be a key part of that safety culture that you talked about earlier, seems like it's very difficult to have that kind of a culture without it being driven from the top down.
Yeah, it really takes everybody's buy-on. You're spot on with that, Steve. Like I've witnessed in companies, carriers, clients, where the management team genuinely wants to do the right thing, but they're met by an executive, could be a CFO, even a CEO or owner, where the answer is, I don't want to spend money on that.
Yeah.
Right. And if we're not aligned, if we don't have that capability, we either need to present the material to the executive to where they better understand the ask and the impact in the business, because that happens, or just understand the disconnect that we can't win the insurance game if we're not making the right investments. And we can't win the insurance game if we're not having, data, transparency, reward, or accountability for performance. Right? It's if we were to rewind 2 years ago, the need for drivers was different than it is today. And our tolerance for a bad driver was likely higher when it shouldn't have been. And those things impact the business of, I have to have a driver, whether he or she has the experience or not, or a record that is deemed acceptable or not. What we have to do is improve that standard and have everybody buy on, support it, and hold everybody that needs to be accountable in that process. The moment we make exception, we break our own rules, and now we're vulnerable, right? And that's likely where the mistakes happen. Right? So in designing the ideal insurance program, right? One, I would say for most people, it's probably free, covered by the state. We don't have to worry about it and move on, right? We don't live in that world, right? We live in a free market world where we have to be masters of our own destiny. And again, it's our goal, our privilege to help provide insight to you all of what impacts that. And then also the levers that you have. Not all insurance programs are created equal, right? I think that's important to understand. No different than agents. You have some that you really like, some that are expertise, others where maybe it could be a price point. And there's reasons to pick every one, and I understand that. But it's important to understand its impact ultimately of where you go. So we can talk about limits, right? Limits impact what we spend. We know insurance costs are increasing, but we know the cost of a claim is increasing as well. So helping guide you in that balance of what's an appropriate limit for me. We can help provide benchmarks to different companies, whether you operate 10 or 50 or 100 or 1,000 or 10,000 units of what's the limit you should carry. We pair that with data that supports what's your expected loss. What are your expected losses within certain deductible or retention limits? What are your expected losses beyond that so that we can understand and forecast, which I think is very important for everybody's growth plans or preservation plans, or even M&A plans of what do we do, how do we do, and where do we take it? So I've run through a lot. I'll kind of recap with a few things that I think are absolutely important for the group. And I know I've done a lot of talking, happy to go through any questions that anybody has. But really, if I could hit home on a couple of things, is clearly define where you want to go as a business, right? Simple mission statement. I want to be the nation's largest LTL hauler in these key markets with, X, Y, and Z is my most critical elements that I have to hit on, right? I think if we define that, we know starting point where you are today, where you want to go, and we'll start to fill in the gaps of how do we get there. First step, complete transparency and bring in partners you trust. It takes a lot to ask that. It takes a lot of anybody to validate their knowledge in the business for you to really share the things, the skeletons in our closets. And believe me, I'm coming from a family business. We had ours in the 80s and 90s and early 2000s, but we have to get past that. So find that partnership and build your story, right? Understand what's your business's story. How did you get here? Where do you want to go? How are you going to get there? Like, what is your system? What is your process? What are the key attributes of your business? What data are you managing? Does that data support the journey you're going on? If not, there might be a gap, and there could be a way for us to help identify and assess that. And the data is only good as the actions and the story that you're going to tell. And the actions are only as good as the data supports, right? So that goes back to, this is no longer a poker game. This is a chess game where we put everything down and we have to figure out how to maneuver the pieces. So with that, I hope you guys have, liked a bit of what I've had to say. It may not have answered everything you were curious about of how do I win the insurance game. It may be simpler than what you anticipated, right? Or you might be still looking for that silver bullet. You probably have the answer for the silver bullet. A good agency, good partnership will help you uncover that. So with that, Steve, Mark, thank you guys very much for your time today. I appreciate it.
Yeah, Patrick, I do have a couple of questions here. Some of these are mine, some were posed a little bit earlier.
Sure.
Do you have an opinion or comments one way or another about a captive market, captive insurance? Any
Absolutely.
pros or cons there?
Sure. With any insurance program, whether it's a traditional guaranteed cost, retros, retentions, captives, self-insured groups, there are pros and cons to all of them. I think a captive is a great opportunity. I think it's a fantastic model to where you can control insurance costs differently, have influence over claims. You need help managing the financial aspect of it, of what's the performance, whether it's a single cell captive or you're sharing it with members. Who are those members? What's the impact of it? What's the performance? What are the controls that we've built around it? And again, not all captives are the same. Some have lower retentions with higher reinsurance, which could be okay if you've never been in one, to where you can begin to explore it. You could have other ones where we have very large retentions and very little insurance, where we have the data management controls, insight, the financial stability to go pay larger claims or make larger contributions should they occur. All those things are great. I think the best thing to do as a business is explore good options, whether they're captives or not, and make educated decisions of does that vehicle, right, support your business's goals? I think in a lot of circumstances, the answer is yes, especially in a world like today where we have a very hard market and rising insurance costs. Captives can be a brilliant solution to help you can control those costs. But we need a certain size and scale and financial stability in order to support that over the long term. So my typical anecdote is captives are great if you're worried about long-term solutions and plannings, right? If we're worried about cash flow, a retention is probably a more likely outcome, right? And that's okay. It's just up to us to help uncover what the reality of that situation is so that you can make the best decision for your company. So I might sound like an attorney because I gave you an answer without saying, do I like captives or not? Yes, absolutely. We do captive business all day long. I'm very supportive of it, but it's not for everyone.
I understand totally. Here's kind of a specific question, Patrick, I've heard from time to time. How do out-of-service violations impact how you evaluate a person's status for insurance? Do they have a big impact?
They do. So the out-of-service violations absolutely do, because it goes back to the insight and control, right? The violations are a data point for an event that happened where an underwriter is going to look at it and ask how and why, right? And the violation could be simple and mundane, but if we're not controlling that, just think about what the perception would be for the stuff that is big.
Right.
Right. So there absolutely is impact to it. It may not be the heaviest weighted assessment tool, but it plays back to the credibility of an operation.
Great. Awesome. I have a question to you. I'm guessing that you support the idea of proper training for what a driver needs to do at the scene of an accident. I understand that makes a great deal of difference sometimes in the outcome based on what the driver did or didn't do at the scene of an accident.
100%. I mean, obviously, the partnership between Acrisure and Infinity, we are all about training, whether it's pre-accident or post-accident. And there are a lot of circumstances post-accident where we wish we got information, statements, pictures, documentation that we didn't. There could be instances where driver says the wrong thing. And now it's that reality that haunts us post-accident that we have to defend in court. So training is of most paramount importance. Like we can't do enough to train our drivers to document it I know Infinity's taken great measures to help post-accident of how do we control the situation?
Right.
What do we need to record? What shouldn't we record? Who do we
What shouldn't
engage?
we say? Yeah.
Yeah, like it's an emotional process. It's scary. I get it. Like when you were in a truck accident, your nerves are rattled, right? So to have the tools at your fingertips at the driver level, as well as at your dispatch and safety level, working in tandem, right? This is nobody did anything necessarily wrong. We have to just address the situation for the reality of it, contain it, preserve it, but do it in a systematic way so that we are, again, playing offense, not defense. So I'm all for training every driver as much as we can through controlled systems and process and consistency, so that way nobody can say, well, in this one case, you made an exception and here's why the outcome was bad. And now we've got a limits loss or worse punitive damages that get assessed to it.
Great. One last thing that just actually this popped into my head a minute ago. You were talking about the technologies. We have collision avoidance technology and lane departure technology. One of the things I've heard several people say, because of that technology, the cost of repair has gone up dramatically because of the cost of those things. Any comments around that, or just agree with it?
Yeah, I mean, I would generally agree. I mean, all equipment's more expensive than it used to be. I mean, whether you're thinking about the personal car you drive yourself with all the sensors that are in it,
Right.
fender bender is no longer $2,500 to put a new fender on your truck, right? Like if I wreck my truck, I don't even know what Ford puts in its sensors, right? It's going to be expensive.
Yeah.
Your tractors, right? Your heavy equipment, same thing. Like it is a reality that as equipment is more expensive, it will be more expensive to insure and also more expensive to repair.
Yeah.
But the tools that are in there should make you better, safer operators, so that our frequency is going down, our severity is going down because of the lane departure systems or the anti-collision avoidance systems. Like if we're enabled to make better choices because of technology, even though that truck might cost 20% more or repair is 20% more, if we're taking down the chatter of our insurance costs, we'll be beneficiaries of it.
Absolutely. Absolutely. Patrick, thank you. I don't see any other questions coming in. Mark, did you have any final thoughts or questions?
No, I certainly am ready to win the game now. So the fact is, the risks that we take operating commercial vehicles can be managed. There are things that can be done to manage that risk. I know there are underwriters, they'll just say, it didn't make a difference, just, miles and miles and things are going to happen out there. But you've certainly given us a few things. I didn't want to go back. You made a comment on cargo insurance. Are the cargo insurance rates going up at the same rate as the liability? And is that due to theft or wrecks?
So theft has had impact in the cargo market, but not to the same degree as liability. Our liability insurance across the nation has seen increases year over year over year that are significantly higher. The inland marine market, which supports motor truck cargo, while in some pockets has trended upward, it's not even close to the same degree, right? So we can win the insurance cargo game with fewer controls. However, if you're hauling sensitive, products, whether they're temperature controlled, high value, target commodities, those are all things that impact it. But again, you can control that if we haul TVs going into downtown Los Angeles or Apple Watches going into Chicago, that's a much different risk than if we're hauling paper going into Boise. Right, and those all become material factors for cost and consideration.
But something someone should consider for routine training is security of your cargo and how people are stealing it, where they're stealing it, where to park, where not to park. Those type of things are much more visible today than they have been in the past.
Absolutely, right? Like just giving it fair thought and consideration of, do we have the right security measures both at the terminal and on the road, whether we're stopped or not, right? Do we have GPS units tracking it? Do we have the insight to how the equipment is being used, right? Where it's going? Do we have pre-assigned stops? Or is it just random, right? Like those are all elements that with some planning we can control, that is we present back to an insurance market is more secure and confident in their decision, ultimately giving you a better outcome, right? A predictable outcome of cost.
Outstanding. Patrick, thank you very much. Some really good information. Just a little word to everybody out there. We'll be sending out an email with a link to the replay of this webinar. That way you can share it with some folks that couldn't join today, because I think there's a lot of really, really valuable information in this presentation. So Patrick, once again, thank you for your time today and your expertise. Mark, thank you for joining us, and thanks to everybody out there that joined us today, and look forward to an invite to our next webinar, which I believe is next week on the 26th. We're going to have a gentleman talk to us about accident reconstruction. We've gotten a lot of questions about that, and when should they be involved and what do they do exactly? So y'all can look forward to that. Patrick, thank you, sir. Appreciate you.
Thank you for having me here. Let's go win the insurance game.
We're gonna win.
Great. Thanks.
Take care.
All right. Bye, everyone.